Hi scholars, let's look at TEK 4.10c. I can compare the advantages and disadvantages of various savings options. Advantages means the good things like the pros. Disadvantages means the bad things or like the cons of various savings options. So I'm going to first talk about what is savings as compared to spending and sharing, which connects with another TEK. And then I will talk about savings options, and then we'll look at the good and bad things. So let's get started. Let's first start with a paycheck. Let's say every month you get paid $5,000. Now, you wouldn't want to spend all $5,000 immediately. You would want to put some away to pay for the needs, which is like the groceries, the bill, the insurance, and things like that. And then from there, you also want to take out some things, for, like some money for your wants. And then you want to put some money away in your savings. And then anything extra, you can donate or loan it to somebody or even just put it in an account. And it's there that you can use it when you need to. So I'm just using this as an example. You don't have to do this. It's just something that it helps me understand. But like some people have a checking account and a savings account. The checking account is like money they put in that they will use every single day. The money goes in there and they will slide their credit card when they're getting groceries or use that credit card number when they're buying something online or paying for something online. So that's like money you use for everyday purposes. Then the other part of your paycheck, people put in savings accounts. And savings account, the purpose is you put it away and you save it for later. There are many, many reasons why people do that. One is that if you put it in a savings account at the bank puts interest on your account, and so when you allow the bank to use your money to do loans and things like that, obviously your money is still there, but like the bank is able to use it for purposes. You get extra money based on that, and like every year it can build. Some people don't want to do that and they just have two checking accounts or whatever. You don't even have to call it a checking account and a savings account. You can just say half goes to savings, half goes for everyday use. I mean, it just kind of depends. Everyone is different. So let's look at savings options. So there are many things people need to save money for. So like when people get a paycheck, sometimes before the paycheck even comes, some money is automatically taken out for retirement. Different things like Social Security. There's like the 401k. For teachers, it's 403b. There's just all these different retirement plans and things like that you get at a later age. So it's kind of like automatically, you are saving money for your future. Now, this is automatic. This, already gets taken out. These are options that you can do to put away. So if you choose not to do a 401k or a 403b for retirement and just want enough money to be taken out for Social Security, that's fine. But a lot of people do invest in these for retirement, and the money does increase as the time goes. So like when you're 65 or 70, whenever you retire, you get not only the money you put away, but there's additional money with that. A lot of people also put away money in like their savings account. So like the retirement, that is money you can't touch until a certain age. Now, if you do take out money from like your 403b or 401k, I know that if you take it out before retirement, you have to pay a tax on that. But if you don't touch it until retirement, then, you're good. So this money you can't really touch. And so this is like in a completely separate account. Like if you have a savings account, a lot of people put money away in a savings account in case there's an emergency because, life is unpredictable. So if you put away money in your savings account, and it's there in case of an emergency. You can take that money out and it'll be ready to go for whatever reason. A lot of people like to put money away in their savings account for vacations. So like, the vacation's not happening next month, but you're thinking, okay, in like 12 months or 18 months, we're planning to make a big trip. We have to start saving now and start putting away a little bit every month so we can pay for that vacation. Sometimes people like to put away the money in the savings account because they're going to make a major investment in the future. And so you have to save up money to buy a car or the down payment of a house. If you've seen my video on financial institutions and things like that, on how to buy a house or a car, you have to save up money in order for that to happen. So here are some different things you can do with savings. You can put away money for retirement. You put away money for emergencies. You put away money for future vacations. You put away money for a future major investment. Okay, so let's look at some good and bad things about having a savings account or putting away money in, wherever. So like the good thing about like having a savings account or just having like all this extra money on the side is like in a savings account, if you need the money, you can take it out whenever you need to in case of an emergency, or randomly you decide to take a vacation at the last minute, you've got that money, you take it out. Your money is safe in a safe place. Some people like to keep their money at home or have another plan. So your money is safe if you keep it in a savings account. And then what's really nice is you don't have to have a lot of money to open a savings account. You can have $15 and, some banks are okay with that, and that can start your savings account. So, and then you just save up from there. You just gradually add more and more money. Now, some bad things or some disadvantages about having a savings account is the interest rates are really low. So I spoke in the last video that, the bank adds a little money to your account every year because you do have a savings account. And, but it's not a lot, okay? So don't count on a savings account to make you super rich after a few years. It doesn't work that way. So definitely invest your money elsewhere in other places like stocks and bonds, and make purchases and sell it again or whatever. So it's not that big of a hype. That you are only insured up to a certain amount. So if something were to happen, some banks only say, up to $250,000. So if you have more than that in your savings account, and if something happens, you only get up to that much. But, a lot of people probably don't reach that amount, or if they do, they probably split it into different savings accounts. Sometimes people get tempted to spend because they know that extra cash is lying around in that account, so that can be a disadvantage also. Yes, you can take it out when you need to, but then that's also bad because then you're taking it out when you need to. Sometimes if you go below a certain amount in your account, there is a fee, so you have to be careful. You can't just take all that money out. You have to stay above to be careful.